All right, so this is section 5 of 6 for the QuickBooks Online Payroll Certification Exam. And we're starting off with setting up pay types. So remember, I told you sections 4, 5, and 6 kind of go hand in hand. So I'm just picking up where I left off from section 4. So clients can pay their employees by the hour or by salary with default hours set. Let's take a look at the pay types before running payroll. So to select how to pay employees, you'd go to the Payroll Center, select the Employee tab, select the employee in question. Next to the Pay section, select the pencil icon. Scroll down to How much do you pay section and then make any adjustments. Hourly employees are paid a set amount for every hour they work. This amount must be equal to or higher than the federal minimum wage. Hourly employees are entitled to overtime, which is at least 1.5 times their normal rate, beyond 40 hours in a work week, unless their position meets an exemption. To set up hourly pay for an employee, you would select hourly from the pay type drop down, and then in the rate per hour box, you would type in the hourly rate for that employee. Clients can set default hours for employees who work the same number of hours every pay period. This saves time and may make the employee eligible for auto payroll. If needed, clients can always update employees' hours when running payroll. Salaried employees are paid a predetermined amount each pay period. Their pay is not typically dependent on the number of hours and days they work. Salaried employees must receive at least $455 weekly unless they meet an exemption, such as being a teacher, salesperson, or an employee practicing law or medicine. To set up hourly pay for an employee, select salary from the pay type dropdown, then select the pay frequency and enter the total salary for the pay period. Overtime. So for covered non-exempt employees, the Fair Labor Standards Act, FLSA, requires overtime to be at least a 1.5 at 40 hours in a work week. Exceptions apply under circumstances like police officers, firefighters, or employees of hospitals and nursing homes. Some states have their own overtime laws. When an employee is subject to both state and federal overtime laws, the employee is entitled to whichever is higher. Extra pay for working weekends or nights is a matter of agreement between the employer and the employee, or the employee's representative. So taxability. You have the federal income tax, which is taxable. Your Social Security, taxable. Medicare is taxable. And federal employment, it's taxable. Federal forms used would be the 941, boxes 2, 5A, 5C, and the 940, which is regular wages, and W-2 regular wages. Commission is a form of compensation that's typically based on an employee's sales performance or completion of a task. Commission can be paid in addition to a salary or instead of salary. Hourly employees who also receive commission must be paid at least the minimum wage for hourly workers. You can add multiple types of commission pay and give each one a unique name. The custom pay types will then be available when you set up other employees. The taxability is like the other one. You have federal, Social Security, Medicare, and federal unemployment tax. And then same thing as far as the boxes, the 941, 2, 5A, 5C, and the 940 is regular wages and W-2 regular wages. The next one is double overtime. So this is not required by FLSA, but that's when an employer pays their employee double. Instead of 1.5, it'd be times 2, their regular rate. Again, it's the same taxability and the same exact federal forms used as the other two. Holiday pay is a compensation for holidays like Labor Day or Christmas when a business may be closed, but the employee is allowed to take time off for work and still get paid their regular hours or regular workday hours. So the FLSA does not require employers to pay employees time for holidays or vacation. However, many employers do provide this as a benefit, and you usually see this as a written agreement between the employer and employee in the handbook. And again, they're the same taxability as the other two, as well as the forms. The only difference is the IRS Publication 15, Department of Labor does have extra on there. Again, it's not required by the FLSA to give employees holiday pay. Reimbursement. So that's the act of compensating someone for an expense that they incurred for work. So employees are often reimbursed for out-of-pocket expenses when they incur these expenses through employment or carrying out duties for another party or member. Companies often reimburse their employees when they buy supplies for a company or go out of town assignments, when they need to maybe pay for lodging or transportation, or when they register for training courses related to the job. So this happens to be exempt for taxability, and therefore you're not putting it on any of the federal forms. Other types of pay that are not normal: cash tips, paycheck tips, and this is the taxability for those. And setting up others. So there's other types of taxable payments to an employer that are separate from regular wages, such as retroactive pay, severance pay, or other earnings pay, and such as like percentage-driven deductions on 401ks. They're taxable, and they also fall into the same federal forms. So running payroll, you would go to the Employees tab inside the Payroll Center. You would select the tab Run Payroll. Alternatively, you could start the process by selecting the + New button and then select Payroll. On the first screen, select the pay schedule and then select Continue. The next screen shows the details of the payroll. From here, you could view or edit the bank account used to record payroll, and then the pay period and the actual pay date. To view or edit any of the employees' details, you can select the pencil icon that you would find at the end of each row. You can select the arrows next to the header to expand any of the categories, such as employee deductions or employee or employer taxes. And when done, you would select OK, and they would be returned to the previous screen. If any employees are paid hourly, enter the hours they worked in the current pay period in the regular pay hours column. When done, select Preview Payroll. To open a draft of the payroll details report, you would select Preview Payroll Details from the bottom of the screen. This shows the payroll details for each employee, plus the cost of the payroll to the business broken down into actual wages, taxes, and employer contributions. When done, just close the screen. Next, either select Submit Payroll or save the payroll for later from the arrow next to it. The next screen shows the payroll is now scheduled and lists the employees by pay type. This is where paychecks and pay stubs can be printed. Finally, select Finish Payroll to commit the pay run. To view the recent run payroll, you would select Paycheck List from the employee screen. Calculation of employee payroll taxes. So QBO calculates wages and taxes based on the employee's W-4 form and federal and state regulations, and the employees process paychecks. That's why it's so important for clients to set up payroll items correctly when adding a new employee. Clients should ask employees at least annually if there are any changes to the W-4 due to life events such as getting married or having a new baby. So federal and state income tax amount calculations are determined by the following: federal and state agency wage and tax calculation tables, employees' filing status, number of allowances or extra withholding amount in the employee setup, pre-tax deduction items included on the paycheck, changes in pay frequency, for example, creating an extra paycheck outside the normal pay schedule, or creating a paycheck with wages lower or higher than the employee's normally receives in any pay period. So adjusting employee federal or state withholding. Clients should run the payroll detail report to verify employees' year-to-date wages and tax calculations. Because remember, we spoke about, I have this in one of my videos, and that there's wage limits with certain things, like, for example, OASDI. So you would need to know if they hit the wage cap and you no longer had to take that out. So in some situations, clients may need to raise or lower the amount an employee needs to contribute to withholding taxes. Any change to this amount affects how much income tax employees contribute throughout the year. Step 1, to make adjustments, first perform a payroll run the usual way. So you would select Run Payroll, select the schedule for the employee, and then select Continue. Enter the hours worked by the employee or their total salary, and then select Preview payroll. Step 2, make adjustments. During the payroll run, make the adjustments. Select the pencil icon under the net pay column. Scroll to the employee's tax section and expand it by selecting the arrow. Edit the federal and state withholding to the desired amounts and then select OK. Continue the payroll run as usual. Note, changing the employee's withholding will affect the paycheck as far as the net pay. Managing scheduled and unscheduled payroll. So payroll schedule options. You can have weekly, every other week, or bi-weekly, twice a month, or semi-monthly, or monthly. Those are the choices that you have there. That's the payroll schedule options. Go to the Employees tab within the Payroll section. Select the employee's name and then select the pencil icon. And at the top of the pay section, you would see how often do you pay. And that's where you would, from that drop-down, select the frequency. To access or make changes to the current pay schedule for the employee, select the pencil icon in the same section and alter the details as necessary. By entering the next payday and the end of next pay period, the system determines which days should be included in future pay periods. Notice the Use This Pay Schedule for employees you add after this one. That box will be under the pay schedule name. Clients can use this pay schedule as a template and assign it to all new employees automatically. When done, you select Save. In the pop-up drawer, choose who should have the updated pay schedule, and then select Save, and done. Unscheduled payroll refers to any paychecks that are processed outside the regular scheduled payroll. This allows supplemental pay to be managed within the constraints of federal and state tax law. Unscheduled payroll is used for supplementary payments such as performance bonuses, commissions, vacation, or PTO payouts. Also, payments to seasonal workers. Clients can also use unscheduled payroll to correct for a missing payroll, create a termination check for an employee, or create a shortened pay period. When running an unscheduled payroll, clients can adjust the pay period to be between the current pay period and pay periods dating back to 6 months. However, they cannot create checks with a past check date. The only check dates available are dates that fall after the last check date and before the next pay date. This is done to reduce the number of errors with payroll taxes. Remember to turn off any deductions or contributions you don't need to include in the unscheduled payroll. Supplemental wages. Those are payments to an employee that aren't regular wages. They include but are not limited to bonuses, commission, overtime, payments for accumulated sick leave, severance pay, awards and prizes, back pay, reported tips, retroactive pay increases, and payments for non-deductible moving expenses. The federal supplement tax rate is currently a flat 22% for most situations. If a supplemental wage payment, together with other supplemental wage payments made to the employee during the calendar year, exceeds $1 million, the excess is subject to withholding at 37%. Note that if a state also has a supplemental tax rate, QBO payroll applies that state's rate when the supplemental rates are selected. In the training section, the calculations are discussed in depth, so you can always go there if you want to take more notes in this section. Let's do an unscheduled payroll and create a separate bonus check for an employee. Note, clients can't use this method to pay a direct deposit on 2 accounts. It only goes into 1 bank account. You go to the Employee tab in the Payroll Center, and from the arrow next to Run Payroll, select Bonus Only. Select either as net pay or as gross pay. Net pay is what's left after payroll taxes are deducted, and gross pay is the total before taxes. So I think we talk about this later, but let's say, you tell an employee, I'm going to give you $200 for today. So if you want them to have $200 at the end, then you would put that as net pay, and then you would just have to then pay accordingly in taxes. So if the taxes come out to, let's say, 80, you would actually put 280 so that they had a net pay of 200. Then you would select Continue and enter the bonus amount in the Employees row. Next, select the pencil icon next to the payroll options and choose Preferred Option, and then select Apply, select Preview Payroll, and when ready, select Submit Payroll. It's important to understand when to use the gross or net. That's what I was just talking about with you, so I'm not going to go over it again. What are the 2 options when taxing bonuses? There's gross to net calculations, and those are the most common. When the gross pay is used, deductions then determine the net pay. So again, if you said the 200, the employee probably is only going to get one something because the taxes will come out of that. If a regular worker has both regular wages and bonus pay included in one paycheck, the supplemental rates are not used. Employers have the option to treat overtime pay and tips as regular wages instead of supplemental wages. The steps to add a bonus to a paycheck would be: first step, enable bonus as a type of employee pay. So go to Employee tab, select the employee, go to the pencil icon in the pay section. In the how much do you pay, you select the pencil icon next to the additional pay types. Select the arrow next to common pay types to expand that section. Check the box next to the bonus and then select save. The second step is to process a scheduled payroll. You would select Run Payroll in the Employees tab. Note that the bonus field is now available. Add the bonus detail to the employees receiving the bonus. Step 1. So now going to automated payroll. Set up the default hours for the employees eligible for auto payroll. You're going to go to the Employees tab, go to the pencil icon next to the pay section. How much do you pay this employee? Select the pencil icon, enter in salary or the hourly pay rate, set the default hours and days per week, and then select save. Repeat this process for each employee that you plan to enroll in auto payroll. Step 2, run the client's first payroll before setting up auto payroll. Step 3, set up auto payroll. From the gear icon, go to the payroll settings. Select the pencil icon next to automatically pay your employees to turn on auto payroll. Next, select the employees for auto payroll button. Check the boxes next to all the employees you want to enroll into auto payroll. Select save and then done. What happens next? At the end of each pay period, QBO Payroll sends the payroll admin an email titled Your QuickBooks Auto Payroll Preview. This email shows a summary of payments to all employees enrolled in auto payroll. If needed, the payroll admin can adjust pay anytime before the deadline stated in the email. They'll need to print a paycheck for each employee who didn't get paid through direct deposit once auto payroll has been processed. Remember that the client needs to run any regular payroll for employees they do not have set up with auto payroll. It's great for a company that doesn't have the time to process payroll and the employees are salaried or are paid through default hours. What's required to have auto payroll? You have to have full service available for most companies through Core, Premier, or Elite Payroll. All employees are on a single pay schedule and payroll setup is fully complete and the first payroll has already been run. How it works. So to understand when funds are likely to leave the client's account, you need to know how auto payroll works. Let's look at the key stages of auto payroll to see what happens. So your client's payroll admin receives the preview summary of the upcoming payroll after the pay period ended and before processing the actual auto payroll. Your client then has 2 days to review and make any changes. The preview summary email states the cutoff time to make any changes. Auto payroll creates paychecks after the cut time. Funds for employees paid by direct deposit are debited from the client's bank account as per their money movement lead time. This is the number of days before the pay date that Intuit debits net pay funds from the bank account. Money movement lead time can be the same day or 5 days earlier, depending on the specific situation. On payday, employees on direct deposit get paid automatically. What if employees are not paid by direct deposit? Then the client needs to sign into QBO Payroll, manually print checks for the employees who receive paper checks. To do this, set up the print preferences. From the gear icon, go to Payroll Setting. In the printing section, select the pencil icon. Select pre-printed QB compatible check paper. Select whether to print 1 or 2 pay stubs. If this is the first time you're printing paychecks, select Align Check, save, and then done. To print the paychecks, go to the Employees tab in the Payroll Center, select the paycheck list from the Run Payroll button, and check the boxes next to the employee, and then select Print. So making one-time and reoccurring changes. So to make a one-time change, you're going to go select Run Payroll, select Update Auto Payroll, edit any fields to update that paycheck, and then select Done. To make a reoccurring change, you go to the Employee tab, select the employee's name, change any employee settings such as salary, deduction, default hours, and then select Done. To manually input a paycheck and pause auto payroll, follow these steps. Go to the Employee tab in the Payroll section, select Run Payroll, select the pay schedule. Next to the employee's name, select the Prefer to Pay Manually This Period link, and then it'll allow you to pay them for that one time. Turning auto payroll off. If clients want to turn off auto payroll, they need to follow the following steps. You go to the gear icon, Payroll Settings, then select Auto Payroll. Alternatively, you can select the link next to the auto payroll status in the Overview tab in the Payroll section. You would select Employees for Auto Payroll button, and then uncheck any enrolled employees that you want to turn off of auto payroll, and then select Save and Done. Auto payroll isn't for everyone. Some businesses, especially those that regularly need to pay overtime, may calculate payroll using timesheets or QuickBooks Time. For this type of business, using the overtime calculation tool is advisable in order to make sure payroll calculations are correct. How do you set an employee up to receive overtime pay? Go to the Employees tab in the Payroll section, select the name of the employee, select the pencil icon next to the Pay section. In the How Much Do You Pay section, select plus add additional pay types. Check the overtime box and add the first day of the work week and then select Save. The overtime calculation tool makes suggestions when hours are entered or timesheets are approved. To see overtime calculation, follow the following steps. Go to Employees tab in the Payroll section, select Run Payroll. Approved timesheets will be imported for clients who use them. If the client doesn't use timesheets, you would add the total hours manually in the regular hours, pay hours field. If there's an overtime hour, the overtime calculation tool will suggest the right amount. Then you would select Fix It For Me to allow the system to make any suggested changes. To learn more about the suggested changes, you can select Explain Why. Now, the overtime calculation tool could be used both with or without timesheets. So recap of the benefits of time. And I went over in depth with that topic, time, in section 4, but this is a quick recap. So QuickBooks Time makes it easier for clients to rebuild and edit employee schedules by jobs or shifts and distribute schedules and tasks to employees. Workers can clock in and record the time spent on different activities or jobs as they do the work. Mobile workers can install the QuickBooks Time app on their smartphones and achieve the same capabilities while working remotely. For companies with field workers or service teams who work with multiple clients in different locations, it's an excellent way of coordinating hours worked with payroll without having to manually enter each day's activity. The app also allows administrators to track workers' locations using the phone's GPS service. However, the biggest one for clients is that with just a few setup steps, employee timesheets and any time-related data automatically syncs with QBO Payroll. This means that the client can use data from the QB Time to manage payroll and invoicing. Recap of benefits for the Payroll Elite subscription and Time. Furthermore, the QBO Payroll Elite subscriptions and Time contain additional features to further enhance its value to the clients, like real-time tracking of project hours and labor expenses using QB Time projects, geofencing alerts for workers reminding them to clock in or clock out when entering a job site, an activity feed that lets team members add and view notes or upload photos and project updates from anywhere, so enhancing the team collaboration. Launching QuickBooks Time. So in QBO Payroll Premium and Elite subscriptions, they automatically get Time as a feature. So clients just need to activate it. So they would go to QBO, select Time from the left-hand navigation, and then select Launch QuickBooks Time. If your client uses QBO Payroll Core or another payroll solution, they'll need to use QuickBooks Time as a standalone product. However, they won't have the same integration and user experience as somebody that has Premium and Elite subscriptions. To set up a new QBO Time account, you would go to the Apps tab, find the QB Time, and select Get App Now. Select the client and choose a plan, so if they have Premium or Elite, and then select Sign Up for discount, or you could get a 30-day free trial period. If your client has a new QuickBooks Online Payroll Premium or Elite subscription and an existing Time account, they'll just need to call customer service to merge those two accounts together. Additional info on this topic: once clients have set up the appropriate overtime policy within QB Time, the payroll item mapping occurs automatically. QB Time imports active employees, vendors, customers, sub-customers, service items, classes, and payroll items from QBO Payroll. Any additions and changes to these items in QB Payroll will automatically sync with time every 5 minutes. Clients can invite their employees to track their time from time itself and from the payroll center. To invite employees from the payroll center, you would select the employee tab, select the name of the employee to track. On the employee details screen, you would select the pencil icon next to the pay section. Make sure the employee's email is filled in because this is how the employee will receive the invitation. And then you would check the invite this employee to track and record their time in QuickBooks Time. And then when finished, you would select done. The employee will receive an email inviting them to join time. They can download the Time app or sign in from the web browser and start recording time. Once some workers start to record their hours in time, their PTO, vacation, sick pay, overtime, and week starts to begin automatically, and it syncs with the QBO payroll account. To verify that the schedules are synced in QB Time, you would go to Company Settings. From the left-hand navigation, you select Payroll and Overtime submenu. In the Pay Schedule tab, adjust your company pay schedule to match that of which is in QBO Payroll. Additional information: clients can import and approve time tracked in time from the Overview tab in the Payroll Center through QuickBooks Online Payroll. From there, they need to choose Approve Time, which is in the left-hand navigation. Once time is approved, they can start processing payroll. There are 2 ways to adjust time if necessary. 1, they can open the employee's timesheet and then select Edit, or they can select the hyperlink in the Run Payroll screen. Once time is approved, clients can process payroll either from the shortcut in the Overtime tab or from the Run Payroll button in the Employees tab. If clients would like the default payroll item assigned to each type of hour their employees track, they need to use the payroll item mapping by employee option. This option assigns one payroll item in QuickBooks Online for all overtime hours tracked per employee. QuickBooks Time can do this from regular time, overtime, double time, or any PTO codes that the client sets up. Voiding and deleting paychecks. So you need to look at several factors to determine the right process for deleting or voiding paychecks. First, check if the paycheck was processed in a prior period or if the tax forms have already been filled already. If the tax form have already been filed, you may need to contact support for further help to void that paycheck. If the tax forms have not been filed, then the next step is just to verify with the bank whether or not the employee has cashed or deposited the check. If the check has not been cashed or deposited yet, clients can just simply delete the paycheck with no problem. However, once the check has been cashed or deposited, then the client needs to void the paycheck, which requires some additional steps. In this case, taxes will be recalculated, but the client will need to get the net amount back from the employee directly. QuickBooks Online Payroll keeps voided paychecks on the client's books and displays them in the paycheck list, but zeroes out their balance. Deleted checks are permanently removed from clients' books and don't show up in the paycheck list. Wages and taxes are adjusted accordingly for both deleted and voided paychecks. Deleting an uncashed or unprocessed paycheck. The best way to resolve issues with paychecks that have been created but not yet cashed is to delete them. And to do that, you'd go to the Payroll Center. In the Employee tab, you select Paycheck List under the Run Payroll button. Use the filter option to search for the employee or the date range. Select Delete from the options in the Action column. What about the paychecks and direct deposits that have been processed? Voiding would be the only option for that. An example of when you would want to avoid and recreate a paycheck is if the employee taxes did not calculate at the proper rate. So to avoid the direct deposit, start by navigating in the paycheck list. Then from the drop down in the action column in the row of the payment to remove, select void. Then to confirm, select void again. What happens next? Once voided, the original paycheck still shows up in the paycheck list and the payroll reports. The system will create an adjustment check to zero out the paycheck. Deleting a check. Additional information. So QBO Payroll automatically recalculates client's tax liability after a check is deleted or voided. If the client has already made a tax payment, they may end up with an overpayment. The system will automatically apply for any overpayments toward future liability within the current quarter. Clients may need to call support to make any necessary changes. Clients can delete or void a check out of order from the current quarter. For example, for the first quarter of the year, January to March, they can delete checks from January 1st up until the due date of the quarterly forms, which is normally the last day in April. You can also do the previous quarter by voiding, deleting, or creating a replacement paycheck for a prior quarter. Clients need to check to see if they need to amend any federal or state payroll tax forms they've already filed. They might have to call support for prior period edits. Paycheck ledger adjustments. Voiding and deleting incorrect paychecks isn't the only adjustment you might need to make in payroll. For some paycheck ledger adjustments, you may also need to make a payroll journal entry to record or adjust payroll postings. Payroll accounts also affect the general ledger, so it's important that you review and adjust payroll accounts when necessary. For example, you'd need to make an adjustment if the client recorded a payroll expense to the wrong account. Clients can also make errors when they're mapping payroll, which can lead to an incorrect financial statement balance. Here's an example to show how this can occur. Your client issues an employee advance from their petty cash account but forgets to record the payment. While reviewing the financials, you notice a negative balance in the other current assets named employee advance repayment. So what do you need to do? You need to create a journal entry to record the initial employee cash advance given to the employee from the petty cash fund. Once done, you can see the updated financial report reflects the dates, balances, and activities of employee advance and first repayment installment. So now we're going to talk about basic payroll reports. So you have payroll billing summary, payroll deductions, contributions, payroll details, payroll tax payments, and total payroll costs. I would say the two we focus a lot on are payroll deduction contribution. This report shows totals for your employees' deductions and company contributions. So this is the employees' deduction and companies' contributions. And the payroll details, we talked about that in an earlier slide. That report provides all the details of a selected pay date. It includes the amount the employee and the employer paid in taxes, deductions, and contributions. Payroll summary by employee report. This report shows employees across the top with earning items, taxes and deductions, employer taxes and contributions as rows. However, you could change the layout by switching the column to row view. You can also add columns or rows for the number of hours or filter from date range, active or inactive employees, work locations, or worker comp class. Total gross pay includes all earning items such as wages, commissions, bonus, or tips, or any additions such as reimbursements. Adjusted gross pay is gross pay minus any pre-tax deductions like 401k contributions. Net pay is the amount paid to the employee after taxes and any deductions. The employer taxes and contributions section of the report shows the amount accrued during the period covered by the report, regardless of whether your company paid them or not. And then the payroll summary report. This report lists all the paychecks for a specific time period and gives the net to gross information for each employee across the column, as well as the employer taxes and contributions and the total cost of payroll. It also includes the number of hours worked in a pay period. It has total across the top, so you can see the total numbers of hours worked, total net pay, total taxes withheld, etc. You can filter the report for a specific date range and active or inactive employees or all employees or one specific employee. It can also be filtered for a specific work location or by workers' comp class if these features are used. Side note, add up the numbers from your filed Form 941 and state forms for the calendar year and compare them with the W-3 worksheet to make sure they agree. Advanced payroll reports. 3 specific type of reports are the profit and loss by class reporting detail, payroll costs, report that shows total payroll cost, workers' compensation report detailing employer contributions. Many data points are involved in calculating payroll and employee costs, taxation, deductions, and contributions. With the right reports, clients can use all of this information to improve forecasting and efficiency. Tax and wage summary reports can be broken down by the type of tax or wages subject to the tax or excess wages over limits if applicable, tax wages, and the amount of tax owed and paid. For instance, if you want to run a report To see if all your employees have reached their unemployment rate limit, you would then utilize one of these reports. Alternatively, a liability report gives a list of taxes and tells you the taxable amount per payroll, tax paid, and tax owed. You can also run reports on employee details to see all employees' contact info, pay rates, social security numbers, W-4s, and the W-4 information. These reports can be run for specific employees or all employees. All default reports can be customized to give the required detail. While customized reports can be saved, they can't be, While customized reports can't be saved, you could bookmark these reports in your browser for quick reference. So let's look at profit and loss filtered by class. To see payroll costs for classes, your client must have class tracking turned on. So to do that, you would have to go to the gear icon, account settings, and the advanced, you go to the pencil icon and categories and ensure that track classing is turned on. Then you'd go save and done. To assign the classes to employees in the payroll settings, there must be classes already set up in the list before you can go to the account preferences. So from the gear icon, you're going to go to payroll setting, go to the pencil icon in the accounting section. Under preferences, you would select the pencil icon for class tracking. Note that in the bottom section, we now have options to configure accounts for classes where you didn't have them before. Select I use different classes for different employees. Now assign a class to an employee using the drop-down menu, and then select continue and done. After you assign a class to each employee, so remember, one class to one employee, you can run a profit and loss by class report, and QuickBooks Online Payroll will show the payroll costs under the appropriate class. You could select reports from the left navigation bar, select profit and loss by class report, and then next select the appropriate date range and run report. You can see that the report now has a column for any classes configured or added. This would be a great way to show wage costs by department for a store or by employee type. Notice that this has nothing to do with tracking time or assigning classes on the timesheet. It only splits accordingly to how it was set up in the payroll setting. Therefore, this method won't work if you need to assign more than one class to an employee. That's why I just said one class to one employee. If you need more than one class, you would actually have to do a journal entry to tie it to more than one class. So this is something I think probably in the future they might need to change. Total payroll report, total payroll cost reports, that's a different group of employees, can be associated with different wage and tax accounts, such as direct labor, sales staff, and admin wages. While this provides more visibility on the profit and loss for the cost of goods sold versus other wages and taxes, it doesn't make it easy to see the total payroll costs. If you want to see your total payroll costs, you can run a total payroll cost report from the default sets of reports in the payroll report section of the report center. Workers' compensation report. This report details the wages paid for each workers' compensation class. You or your client can use this report to prepare forms for state agencies or insurance companies to report what has been paid. The workers' compensation tracking and QBO payroll was designed to be used with Intuit Workers' Comp Partner Program. However, you can still create the track workers' compensation classes without opting into the partner insurance program. This is very helpful because insurance companies require tracking employees by worker comp codes. Add a workers' compensation class to each employee record by editing the employee section of the employee record. You'll need to verify the workers' comp codes with your client's insurance company. Use the left-hand navigation to open the report center, scroll to the payroll group of reports, then select the workers' compensation report. Once open, you can edit the date range, work locations, workers' comp class. To see employees by code, select the wages paid. Understanding balances in the balance sheet and profit and loss. Reviewing the actual account balances is an important step after running payroll. Depending on your chart of accounts setup, there may be accounts that don't match the payroll reports because of what was or wasn't processed. Knowing which report to run and how to interpret them is a crucial part in determining what balances should actually be. So the balance sheet will review clients' payroll liabilities and will also include any sub-accounts. The profit and loss, you're going to be looking at payroll wages, payroll taxes, payroll benefits, and other payroll expenses. It's worth noting that the profit and loss statement does not show amounts withheld. So reconciling payroll. Once payroll is processed, it's best practice to reconcile the payroll accounts with the general ledger. The key steps are: step 1, ensure that your payroll reports accurately reflect the wages and hours for payment. To do this, you would follow the following steps. Step 2, confirm that you have deducted the right amounts from each employee's paychecks. To do this, you would do the following steps. Step 3, review the payroll entries automatically produced within QBO Payroll. To do this, you'd follow these 2 steps: profit and loss and balance sheet. Step 4, preview your payroll tax liabilities and other payroll liabilities. To do this, you verify these steps. Step 5, preview your payroll tax liability and other payroll liabilities, again, after making the necessary tax payments. To do this, you do these 2 steps. And the last step is step 6, check that your account balances have the correct normal balances. To do this, you follow these last 3 steps. Excuse me. Viewing, printing, and saving payroll tax documents. To view, print, or save payroll tax filings, you would select Taxes, and then select Payroll Tax tab, then select Filings option, locate the correct form, and then select Preview. The filing opens in a new browser tab to view, print, or save. To view, print, or save payroll reports, select the report, select the Reports tab, select the correct report. If the date range needed is different from the last report run, select the required date range and select Run Report. If the date range shown is correct, use the drop down to select Export to Excel or Printer Friendly to create a version to save or print as needed. Archive. So archiving means you move documents to a less prominent location without deleting them. This allows continued access to historical records in the future if needed. Let's see how to work with archives. To archive an old form, you select Taxes and then select Payroll tab. Scroll down and select Monthly Forms or Annual Forms. So this is something, annual form may be something like you want to save W-2s from the year before. So you would put that as annual forms. And then next you would select the desired form. Select the liability period if needed. Note, the available liability periods only extend back to a year or 2. If you need to archive a form from an earlier period, you probably need to contact QBO Assistant directly. Then you would select Archive. To view the archive form, you would go to Taxes, then Payroll Tax, select Archive Forms and Filing, and then select View. Paying tax, adjusting tax deposits, and filing forms. QBO Payroll makes tax filing side of running payroll easy. Once you establish the company bank connection and confirm company and owner identities, a team of experts at QBO Payroll can take over the management and payment of payroll taxes. This full service comes as standard if you have Core, Premium, or Elite subscriptions. The service ensures all payroll taxes and form filing for federal and state are automatically filed unless your client chooses to do them on their own manually. By default, the automated taxes will be set on for all Core, Premium, and Elite, so your payroll taxes and forms will be filed automatically for you. The payroll tax liability report shows the tax liability, the taxes paid, and the tax still owed for a selected date range. For your peace of mind, you'll get an email reminder before any payroll tax payments and files are made for you or on your behalf. And you'll be able to double check any details. This can greatly reduce the amount of time and errors found when processing payroll. You have the option to turn off automated taxes and forms for clients that prefer to pay their taxes manually. Whether your payroll is auto paid or manual, QBO Payroll allows you to view past tax payments and filed forms. Through Core, Premium, and Elite, we also prepare and mail W-2s and 1099s directly to the employees and contractors at the end of each year. QBO Payroll Elite includes that tax penalty protection up to $25,000 we talked about in the last video. Auto pay forms are available to view and print approximately 35 days after the end of the quarter. QBO support both electronic and manual payroll tax payments and allows you to manage payment schedules. To choose between manual and automatic payments, view your payroll setting options and either turn it on or off. QBO Payroll will e-pay and e-file payroll federal and state tax liabilities when you have the automated tax and forms turned on. However, you do not have the ability to customize the payment date, as Intuit will process the payments and filing. So if the client needs to select the date or filing date, they need to turn it off and send it in manually. Tax payment. To verify the automated tax and form is turned off if you decide to do it manually, you go to gear icon, payment, payroll settings, go to taxes and forms to ensure that the automated tax and forms is on off. If it's on, then you would select the pencil icon and then uncheck the box and then select save. Then you will see that the automatic tax and forms is confirmed to be off, and then you would select done. Then to make the tax payment, you would select taxes and then go to the payroll tax tab. For the federal 941, you would select pay. In the drop down, select earliest as of payment date option. Select e-pay to approve and schedule through QuickBooks Online or to make a payment yourself. You can also select that, and then you would select done. Paying a penalty. So sometimes, you might be late on purpose or by mistake, and you have to pay a penalty, correct? So verify that the automated tax and forms is off. Then navigate to the payroll tab in the tax center and select pay in the action column of the payment to make. Even if you pay via ePay normally, select the make payment myself option. Go to the appropriate website, make a tax payment, including the additional penalty and any interest. Now we need to account for the payment of the penalty and interest in QBO. Record the penalty and any interest incurred using a check or expense transaction. Typically, interest and penalties post to two different accounts. If you want to match the bank feed to the payments, choose Find Match in the bank feed, search the data parameters, check to mark the two transactions, and then select Save to record the transaction. If you choose to not use the above steps and keep the automated tax and form on, then you need to contact a payroll specialist and provide them with the details for them to record and make the changes for you. Most quarterly tax forms can be submitted electronically. You can e-file Form 941 through QuickBooks Online Payroll account. It is active for federal electronic services. If automated taxes and form setting is on, QBO Payroll will e-file forms on your behalf. If it's off, you as a client will need to process the forms manually. So you go to Payroll Center, Overview tab, Let's Go, confirm business and enter any missing employee detail, continue, and then enter your federal and state information, and then enter your bank information. You must sign up for federal e-file first, and then you can sign up for state e-file. In most cases, you can e-file state unemployment and state withholding tax forms if the account is active for state e-filing or e-services. In a few states where e-filing isn't available, QBO will provide you with a signature-ready form or a worksheet to prepare the official form provided by your state tax agency. Enrolling for e-filing. Following the steps for enrolling electronically with automatic taxes and forms off, if you sign up for Intuit Electronic Services, you can file federal and state tax forms electronically. Confirm if appropriate tax payments have been made relating to your tax form. State with the Payroll Overview tab, you would go to the Due section, select the tax form, and select File. It's usually under It's Time to File Forms. On the page for the tax form, you would select View. If any questions appear, answer them. Review the information on the tax form. You can print a copy for yourself. Close the tax form window. Return to the page for the tax form. Make sure the File Electronically checkbox is marked, and then you're going to select Submit. Accessing files and forms. You can access and view files that have been submitted in the Tax Center. You would select Taxes and then Payroll Tax. Select the Quarter section. Then select View and Print Archived Forms. Select View. Sometimes you'll have to amend or correct payroll forms. If your client needs to make a correction or use automated taxes and forms, you'll have to contact QBO Payroll Support. You may be responsible for acquiring, preparing, or filling the appropriate amendment or corrected form. You do have access to the original and updated versions of the form to assist in preparing the amendment or corrected form. The original version is available in your Archives Quarterly Form page. If you opt out of automated taxes and forms and have filled out a form and is not yet submitted, you could delete this form and create a new one. So you would select Tax and Forms tab, View Archived Forms, and then you would just find whatever form you want to delete and select Delete. Year-end activities for payroll. So step 1, you want to review and update employee information. Remember to review and update any information for inactive or terminated employees. You want to make sure you have the correct social security numbers, current addresses, employee wage information, local tax rates, benefit information, like is it an S Corp, 401k, health insurance, commission and fringe benefits, sick and vacation settings. Make sure all employee paychecks have been reported, the ones that have a handwritten commission, termination, and bonus checks. Step 2, you want to run the final payroll, creating any year-end bonuses, including final payments for fringe benefits, commissions, or contributions. Make sure direct deposits are approved, sent, and on time for to be processed. If paychecks are direct deposit, the holidays may affect processing times at the end of the year. Please visit the link for more information. Oh, that's if you're going there. All right, step 3, you have check federal and state tax rate notices. Any state agencies may assign a new state unemployment insurance rate for the new year. If your client gets a rate notice, you'll need to update that in your SUI rate in the payroll account before their first payroll of the new year. Federal and state agencies may assign a new tax deposit schedule for your business. If your client receives this notice, update the schedule in your payroll system. Step 4, set up employee access to the W-2. So remember, you have to have, by January 31st, you have to send out W-2s and 1099s. So through the QuickBooks Workforce, if you set it up properly with your employees, they can see their pay stubs and W-2s online. But sometimes the owner might be responsible for preparing and submitting the W-2 forms if you opted for that. And so you would need to know the steps in filing and getting the W-2 forms to your employees. Even if you file W-2 forms electronically with the SSA, you need to print and distribute copies to your client's employees and print copies for your client's records. Here are some of the information about what copies go to their agency, the employee, and for you, the client. So these are the copies. You have copy B, C, D, 1, and 2. All right, after you submit your Forms W-2, you may notice that the filing status in your QuickBooks Online Payroll account displays submitted, or it might say in progress. It waits until January 20th to start e-filing your W-2 information to confirm it complies with the agency's latest e-filing requirements. The electronic Forms W-2 are due by January 31st. After January 10th, Form W-2 is visible within Workforce for your employees. After you submitted W-2 information to the agency, the filing status will change to completed, and you'll receive an email notification. Add up the numbers from your filed Forms 941 and state forms for the calendar year and compare them with your W-3 worksheets or your payroll, tax, wage, and summary report. You can perform a similar reconciliation at the end of each quarter by comparing your Form 941 and the payroll, tax, wage, and summary report. The last thing I have here is they didn't go into detail in this one particular section, but I did see some questions here. So I went and Googled this following term: change your accounting preference in QBO Payroll. This is the link. I'll show it to you right here. So all you have to do is go to Google and actually type in these words right here: change your accounting preference in QBO Payroll. There's a couple of questions on here. So this is if you have automated, and they actually go over both. And they say, well, what do you want to change? So let's say you want to change your wage expense. These are the following changes you can change. You can change your wage expense, company contribution, employee taxes, or payroll expenses. The liabilities you can change are the federal and state taxes and local taxes under your payroll tax payable. And what we mean by change is if you just want to change the name of it. So you would first need to change it in your chart of accounts to tie it in. So suppose you have several different wage expenses for, maybe you don't just have one wage expense account that you use for employees. You have several of them. Let's say, warehouse and office. So you might have warehouse wage expense and office wage expense. So you just need to go and tie the appropriate wage expense to the appropriate employees. And then they tell you here what the different steps are for doing that. So I just wanted you to know that I didn't see these notes in the training section. That's why I gave you this link to this particular QuickBooks block, and it would be helpful in answering some of the questions. So here we are at questions. So which statement is not true about overtime calculation tool? Answer: payroll users can select fix it for me to accept the suggestion made by the overtime calculation tool. Another question. A company just processed their last payroll for June and would like to reconcile overall payroll wages for the current quarter before the quarter ends. Which payroll report would Sally use to ensure the upcoming payroll return form 941 is accurate? That would be payroll summary. Auto payroll supports both a one-time change and reoccurring changes. How do you make a reoccurring change? You go to payroll, employees, select the employee, make the change to salary deduction default hours as required. Beverly's client is not using the automated tax and forms filing feature in QuickBooks Online Payroll. As a result, she submitted the payroll deposits late and incurred a penalty and interest. Where should the penalty and interest be recorded? You go to Taxes, Payroll Tax, Payment tab, Pay Tax, and add Payroll Tax Liability Adjustment. Then remember, you have to go back to QBO and record that penalty and interest. Which scenario is a good fit for the auto payroll feature in QBO Payroll? The owner keeps forgetting to run payroll. She would like a set it and forget it way to process payroll automatically for each period. Which two are required to set up auto payroll? The company must have run their first payroll, and at least one employee must be assigned to enable auto payroll. Which activity can you perform in QuickBooks Online Payroll if time is integrated? You could approve time in QuickBooks Online Payroll. How do you set up an employee to track their hours and time? You go to the payroll, go to the employee, edit employee, enter their email, and invite the employee to track and record hours. Where is QuickBooks Online Payroll? Where in it can you approve time tracked in QuickBooks Time before running payroll? You go to Payroll Center, Time tab, Approve Time. What two of these can you do in QuickBooks Time Elite but not in Premium? You can use geofencing and add and view notes, photos, and project updates from anywhere. In which of these scenarios would an employer void a check? An employee notified the employer that the employee taxes and deductions are not accurate on their pay stub. So it was already processed, but it wasn't accurate. So you're going to need to void that check and recalculate taxes. In which two scenarios would it be best to practice to delete a paycheck? The paycheck has not been processed and is incorrect, or duplicate paycheck was created and has not been processed. So key thing is not been processed. An owner has processed the last payroll for the month and wants to ensure that the company did not over-collect or under-collect health insurance premiums. What two reports would they use to reconcile employer and employee contributions for each employee to the health insurance bill? Payroll deduction and contributions, and payroll details. Which two payroll reports should an individual employee and company contributions to look at retirement plans? That would be payroll details and retirement plans. Which two payroll reports should employees adjust gross wages for a specific paycheck? That would be payroll details and payroll summary by employee. Which report shows the balance of all payroll liabilities? That's in the reconciliation process. That would be the balance sheet. Which two payroll reports show details for employee taxes and deductions, as well as employer taxes and contributions? That'd be payroll summary and payroll detail. An owner has processed the first payroll of the year and would like to reconcile the company's payroll wages to ensure that the total amount paid matches the wages expenses. What two reports would they use to reconcile? That would be profit and loss and balance sheet. It's time to transmit the company's retirement contributions for the pay period. What two reports would be best for verifying accurate payment submission? Profit and loss and retirement plan. At the end of each quarter, an owner reconciles all of the payroll liability accounts on the balance sheet to ensure that each liability account shows the correct amount owed to each agency. Which report can they run to see the transaction detail of amounts withheld and payments made? The transaction report of the designated payroll liability on the balance sheet and the payroll tax payments of the designated payroll expense on the profit and loss. It's time to transmit the company's retirement contribution. For which report would be best utilized to submit the payment? That would be the retirement plans.
An owner is reconciling their state unemployment and has a negative balance in their payroll liability account. What two reports? Wait, didn't we just, I think, no, we didn't do that. Okay. So the two, if you have a negative balance in liability, would be transaction detail report for state unemployment payable and transaction detail report for state unemployment expense. After each payroll is processed, an owner will need to accrue for unused paid time off on the balance sheet, which reports will be used to calculate the total amount to accrue, payroll detail, and vacation and sick pay. An owner would like to have advance notice for her upcoming payroll tax draft. Where would they expect to view notification for upcoming payroll tax draft? Via email reminders. Remember, they send an email to you on that. A client was in a rush when filing the quarter-end payroll filing and did not have time to save a copy. Where would they go to download after-the-fact payroll forms? You go to Taxes, Payroll Taxes, Filing, and then Archived Forms and Filing. Then you would select the appropriate form. When you change your payroll account preference and choose the updated past transaction, what will not be updated? Your bank account. That was in that article. A company has opted to have a wage expense account tracked by each employee's wages and are posted to their expense account. A new employee was hired. If Randy forgets to set up the specified employee's wage expense account for the new employee, because remember I was saying you could have like warehouse, you could have office. Let's say they didn't select one, where would it go to? Their wages would post to the default wage expense account. So if you didn't select the specific one out of the chart of accounts, it'll automatically give you your default wage expense account. A company would like to use class tracking for payroll. Their employee work in multiple classes in a pay period. How would they set this up? Is it on the next one? You know what? I think I might have put this at the end. Did I put that at the end? Yeah, I did. So we'll look at that question at the end there. Your client has asked you if you have employee wages posted to separate accounts. That is office, general labor, sales, marketing. Where can you make these changes? You go to Gear, Payroll Setting, Accounting, Wage Expense. That's from that article over there. Where do you go to change the posting bank account? Gear, Payroll Setting, Bank Account, choose Bank Account. Ann's Angora Yarn Shop has called because it appears their payroll taxes are posting to different accounts. She'd like them to post to one account. How? You go to Gear icon, Payroll Settings, Accounting, Employer Tax Expenses. All employer taxes are posted to one expense account. Where do you go to set up overtime calculations? Go to Payroll, Employees, Edit Employee, Pay. How much do you pay? Add additional pay types. Where would you find the amount needed to pay to retirement plan admin? You'd go to Reports, Payroll, and then go to Retirement Plans. So here are 3 questions that I came across that I could not find directly in any of the training, and so I went like I did here in finding this article, and I feel like I've pretty much narrowed down or correct, but I still gave you all the entire question in case you find a different solution. So which payroll report shows the class selected for an employee on a specific paycheck? I put payroll summary. But here are the solutions. These are the following choices. An employee has contacted her employee to let them know that she needs a new copy of her Form W-2. Where can the employer find a printable employee copy for the Form W-2 to provide to the employee? Again, I looked at it and there are several different ways because it depends on if they have auto pay on or auto pay off. And so I ended up saying, and I'm pretty sure it's taxes, payroll tax filing, annual forms, printable employee copies, W-2, select employee, and then select W-2 copies B, C, and 2. And the last one was the one I was saying that's at the end. This is the question. A construction company has called you because he'd like to use class tracking for payroll. I looked and I found out as of right now, there's only one class per employee assigned to paycheck. So obviously something they need to change because that's a huge limitation. Because let's say a construction company, you probably have one employee going to several sites in 1 week. Unfortunately, for one paycheck, you could only assign one class per employee per paycheck. So that's very limited for, let's say, a construction company. But I think this is the answer. You cannot set this up because only one class per employee can be assigned to a paycheck. And that ends section 5. We have one more section, section 6, and I hope to get that out to you by next weekend. And then make sure you get the test done by October. I said October 17th, but I noticed that it actually tells you mid-October on in the training section. So let's just go ahead and change it to October 15th. Make sure you have your certification by October 15th. I will try to get section 6 out within the next couple of days, the latest a week. Thank you.